Hello class, we're now in week number 7 and our topic is about the preparation of closing entries. What is the nature of closing entries and when it is prepared? After adjustments are recorded in the journal and posted in the T accounts, our closing entries are made to close all temporary accounts with open balances to the capital accounts at the end of the accounting period. Temporary accounts include the revenue and expenses and the drawing account. We have procedures to follow in the preparation of closing entries. First is that to close the revenue accounts to the temporary account called the income summary account, or we term that one as ISA. Second is to close all expenses accounts. Third, to close the balance of ISA to capital account. And lastly, to close drawing to capital account. The pro forma entry for procedure number 1 is that we're going to debit revenues account and we will credit income summary. Why do you think that we debit revenues here? Looking back in our expanded accounting equation, the normal balance of revenue is credit. So to close this one, we have to debit the revenue accounts. What do you think will happen to the expenses accounts? How we are going to close all of this? The expenses accounts has a normal balance of debit, so to close this one or to decrease this one, we have to credit all expenses accounts. Therefore, this is our pro forma entry. For entry number 3 or procedure number 3, if it resulted to net income, we have to debit the income summary and we will credit capital. Why? Because if it is a net income, therefore, income summary credit is greater than our debit. And if it resulted to net loss, we're going to debit the capital, it decreases the capital account, and we will credit the income summary to close the balance of income summary account. And lastly, to close the drawing account, okay, drawing has a normal balance of debit, so to close that one, you have to credit the drawing account. Alright, to understand it better, let us have your week number 7 activity or assignment. You were given the adjusted trial balance for Anivan Liagas, CPA, okay. We have the date here, December 31, 2020, and you were required to prepare the closing entries. Following the procedure number 1, we have to close the revenue accounts. We have only one, this one. So to close this 180,000, since it has a credit balance, so you have to debit the professional income 180,000 and you're going to credit income summary 180,000. And procedure number 2, we're going to close all expenses accounts, and it started from uncollectible accounts down to rent expenses. To close all of this, we have to credit these expenses accounts. We are going to close that one to income summary account. How we get 72,300? It is the total of all the expenses accounts. And third procedure is to close the balance of the income summary. How to get that one? Or how you are going to determine the balance of the income summary? Of course, you have to post that one in the T account. Our first closing entry, we have a credit of 180,000, and second closing entry, a debit of 72,300. And we can get the balance of 107,700, a credit balance. So to close that one, that's why we debit income summary and we credit A. Liagas Capital 107,700. This connotes here a net income. Why? Because total credit is greater than the total debit. Alright? So let us continue. The last closing entry rather is that to close the drawing account. And looking back in our adjusted trial balance, we have a debit balance of 10,000. So to close this one, we have to credit the drawing account. So this is our entry. After we successfully prepared the closing entries, now we are going to post that one in the respective account of the affected accounts. Okay, first closing entry, we have the professional income. So we assume that this is the date of our professional income account. Okay, this is the date of the transaction, and we're going to post now the closing entry number 1. So since it is debited, therefore it is posted also in the T account under the column or under the side of the debit. So you have the double rule. So this is closed account already. And for the income summary, so that's it. Let us continue for closing entry number 2. Alright, so we have here credit all the expenses, okay? And you are going to debit the income summary. Alright, so that's it. And we assume here that the transaction date is December 31, 2020, and we're going to plot the closing entry. Okay, we're going to credit 1/8 for the uncollectible account, so it must look like this. And let us continue. Okay, and as you can observe, class, all of the expenses accounts were already closed. All right, so that's the purpose of the closing entries again, to close the revenue, expenses, and the drawing accounts. All right, so finally, for the closing entries, okay, the last one is that we close the drawing account. So we have here a debit of 10,000 in the capital account. So it must look like this. Okay, we double rule the Liagas drawing account because it's already a closed account. And we'll get the balance of Liagas capital. So we have to put, okay, the total credit is 155,200. Total debit is 10,000. Therefore, we have a credit balance of 145,200. Alright, we successfully paused all the closing entries in the T accounts. As you can observe, all the temporary accounts were already closed and only the balance sheet accounts or the real accounts remained open. So that will going to be part of our post-closing trial balance. Alright, so again, the post-closing trial balance is a trial balance prepared after the closing entries. Therefore, only the ALU remains here. And okay, these are the balance sheet accounts with open balances that will become the beginning balance of the next accounting period. So let us have a recap of what I discussed to you. So the summary, the important points to remember. For the closing entries, close the revenue and expenses to ISA, close ISA to capital account, and finally close the drawing account to capital account. And for the post-closing trial balance, it includes only the real or balance sheet accounts, and it shall become the beginning accounts or beginning balance of the next accounting period. Thank you so much for watching. Up next is the reversing entry.